What's going on? What's going on, team? Welcome back to another week. Welcome back to another Money Monday, another weekly stock talk. Crazy week ended last week, and we have a crazier week coming up. Last week, we had the Fed decision. We also had the inflation CPI data come out. And this week, we are starting off with the continuation of the sell-off. If you guys watched last week's video, you guys saw the call that we made on that rejection off the top channel trend line. And we were saying that we were expecting to see a sell-off after we hit that, get rejected, and start selling off. And that's exactly what happened. We'll dive right into it. I did want to read up on a quick article or a news article that came out here recently today. And it was about the JP Morgan analysts predicting a continuation of a sell-off. And I want to mention why that aligns with what we're seeing from a technical analysis standpoint. We'll keep this video short, brief, and sweet. That way you guys get what you need and can move on with your week. So the article is basically saying a recent JP Morgan and StoneX Group study has revealed that the world's most prominent money managers are in the process of unloading up to 100 billion of stocks by the end of 2022. That is looking like that's going to happen here on the charts. We'll dive into those right after this. The recent equity market correction and bond rally are consistent with the rebalancing hypothesis, a macro strategist at StoneX basically said. And investors had to sell stocks and buy bonds to get back to target because the sovereign wealth funds could be selling roughly 29 billion in equities by the end of December. Meanwhile, U.S. defined benefit pension plans would need to shift up to 70 billion from equities to bonds to hit their targets. So again, investors are selling stocks and buying bonds to get to that target. JP Morgan also mentioned that Japan's 1.6 trillion GPIF pension fund would have to sell 17 billion of equities to reach its target asset allocation as well. So from just that article, we can see that a lot of money is going to be selling out of the markets. The stocks are going to be selling, the markets are going to be selling. And let's go ahead and dive into the daily chart on the S&P 500, which is SPY. On the right here, we have SQQQ. And if you guys have been watching this channel, you know that we've been trading inverse ETFs. And that is SQQQ and TQQQ. And SQQQ has been a focus for us as this market has been selling off. We were waiting for that rejection and we were jumping into SQQQ in preparation for this sell-off. We also talked about a gap that we had to fill, which we just filled today. We filled that gap. We were buying in right up here at this resistance level at this top channel trend line in anticipation that we were going to see that sell-off, filling that gap. And obviously that all held up once we saw the Fed raising rates by 50 basis points last week. The CPI data coming out, while it did drop a little bit, it was still high, 7.1%, I believe, is what we were seeing versus 7.3 the previous month. So that wasn't really much of a boost to see any positive action. And we also obviously had those two negative catalysts affect it, causing the market to sell off, causing this top channel trend line to hold true. And obviously we saw this double top. We were looking for a triple top or basically a head and shoulder pattern. However, I mean, to a sense, to a degree, it did pan out. But this pop right here, we basically saw that excitement of retail investors or traders thinking that the CPI data was strong enough or low enough for the Fed not to be as aggressive, which it did drop from 75 basis points to 50. So they are slowing down a little bit, but 50 basis points is still a lot. And so that's in essence kind of what caused the sell-off to begin. Obviously, the excitement caused it to pop a little more. To a degree, we did see that triple top. However, basically the double top right here panned out and we saw that sell off. Now we did form two more gaps. We formed a gap from 398 down to 394. That's our first gap that we saw. And then the second one was 389 to 386. That's the second gap that we saw. And we ended up filling this previous gap just today. So that's basically kind of what we were talking about. As you can see, these little lines right here, that's what we drew last week. If you go to last week's video, you'll see me drawing these out. And so that in essence panned out exactly what we were talking about. At the moment, besides the article, besides the sell-off that we're seeing, you might be wondering, are we ready to bounce? Are we ready to start recovering again? Now that we fill that gap, now that we've seen the sell-off from that report, now that the Fed raised rates and we saw that sell-off as well. And the short answer is, nobody can really predict the market, but we can definitely draw conclusions from the technicals that we're seeing, from the fundamentals that we're seeing, and from the economic data that we're seeing released. As of right now, our first target right now is 374, 375. And that's because if we're looking left, over the last couple of months, that has held as a resistance back in September into October. Twice that was a resistance, and then we finally broke it, and then it held as a support, came up, came back down, held as a support again, and then we saw that rally into that top channel trend line. Now we're selling off, we're coming back down. While we did fill this gap, there's two ways that we can go about this. The first would be we fill the gap and then we come back up to fill these two. Obviously, after this gap happened, it actually took some time. It took pretty much almost, I would say, almost a full month, if not a little less, to actually get this gap filled. So just because these two gaps exist, gaps do get filled, but it does take some time. So don't think that it has to get filled tomorrow, right? And so just from that, you can't say that, we're going to see this bounce right now. We are going to see this recovery and come back up, because we did test this top channel trend line twice, right? So to test it again so soon, I don't think that's going to be happening. What I would see, and now that we've seen that article as well, what I would expect is us coming down, testing this support right here at 374, 375, because it was a support and a resistance over the last couple of months. We test that, potentially hold and consolidate, and might come back up to test this top channel trend line again. And that would pan into January. So that would be the next year. And so we might start seeing a different story next year. If we do see a downtrend, as we're assuming, which we're basically coming down to this, and a consolidation for the rest of the year. Second situation that we might be seeing is we come down, we test this. It doesn't hold. We come down and we continue to sell off down to 353, at which point we bounce here, start the new year, and begin to start seeing the market going up in January. As of right now, we don't have any economic data or any fundamental side to this to give us a thesis that we're going to see a recovery, or we're going to see the market doing well into the end of the year and the beginning of next year. As of right now, it's all negative data. It's all negative catalysts. And there's nothing to really prop the market or push the market higher as of right now, especially if we do see a lot of money managers selling off. That's just going to cause the market to continue selling off. So again, the first two levels that we're going to be watching is going to be this 373, 374, 375 level, which we're basically approaching. I wouldn't be surprised to see us test this on Tuesday. And then if that doesn't hold, we're going to come down to 353. On the other side, if we do, by some miracle, which I don't expect this happening, but by some miracle, if we do see a push back up to the upside, the first level that we're going to be watching to the upside would be 397. And then not too far from it would be 400. 400 tended to be a pretty solid level. And it's also lining up with the top channel trend line. If we do, by some miracle, again, by some miracle, if we do start seeing a push back up to the upside, those are the two levels I'd be watching. 370, 397 has been a magnet level while we were consolidating up here, but since we broke it and started pushing lower, we're holding below the 180, 200 level SMA. We're obviously got rejected by the top channel trend line. We broke the 100 simple moving average. We broke the 50 simple moving average. So again, we're breaking all of these support levels that we could be holding at, but it's not, right? So that's why the best conclusion that we have and that I'm drawing from this is we're coming down to this level right here at 374. And this yellow line right here is actually the zero line on the standard deviation channels. So I wouldn't be surprised to actually see us come down to 369, 370, 374. This general area is where I'm targeting to see a move to in the next week. Hold up, let me try to get this as a triangle. Well, that didn't happen. So yeah, that's basically the general level that I'm looking at to get into. 1 second. There we go. So that's the levels that we're looking at. Let me make this wider so I can change this chart. Again, that was a daily chart that we were looking at. If you're looking at it from a big picture, we're still in the sell-off channel, zooming back into where we were. So that's basically just from price action that we're observing, right? The second two things that we do want to look at, we're looking at the daily chart again. RSI, we're not even close to being oversold yet. So that means that we still have a lot more downside to go. And looking at the daily chart, that's what we're seeing. The weekly chart, the 4-hour chart are both showing that as well. And we still have quite a bit of room to go to the downside. So again, I wouldn't be surprised to see us move down to this 373, 369, 370 level, if not 354. I wouldn't say 354 would necessarily happen by the end of this year. It could, but that would just be kind of selling like we've seen over the last 2 days. And since we've seen so much selling, I don't think it's going to be happening that quick unless we get something seriously negative come out. That's going to drop the market that quickly. But again, RSI needs to be below 30 for us to start seeing oversold levels. That's when we're going to start considering a potential bounce play and look at TQQQ instead of SQQQ. As of right now, that's our focus. The MACD, we saw that push up to the upside when we saw this move, this excitement move. And then boom, we jumped into another sell-off. The averages never crossed. We're continuing to sell off. We're still in the red. So we have it set up where it's red when we're just selling off. And when we're starting to see it kind of attempting to cross, it goes to orange. We haven't seen that shift to orange yet. So that means we still have more downside. I would expect more downside throughout this week. RSI is showing more downside. MACD is showing more downside. Technical analysis is showing more downside. Fundamentals are showing more downside. News is showing more downside. So there is a lot of negative push really causing us to predict that we're going to start seeing a sell-off. Now, going ahead and jumping into some of the data that's going to be coming out. Today, we saw the housing market index come out. We saw 31 out of a forecasted 34. The previous was 33, which is not good. Tomorrow, what we're having is the biggest thing is building permits coming out. It's forecasted at 1.485 million. The previous was 1.512 million. So it's going down. I would say that's probably the biggest economic release that's going to happen. Would be that's tomorrow. And then looking at this week, we pretty much have Wednesday, current account deficit coming out, consumer confidence index coming out, existing home sales coming out. Those are important ones. Existing home sales. Thursday, initial jobless claims, continued jobless claims, domestic product revision, Chicago Fed National Activity Index, Index of Leading Economic Indicators. That's Thursday. That's what we're seeing on Thursday. Those are some of the biggest ones. GDP is getting released on Thursday as well. So all the ones with the 3-star, and I'm on investing.com/economic calendar. Anybody can pull this up. What I would suggest is going to filters, filtering it through US, and obviously changing your time zone. And that's what you're going to be getting. You're going to get these results or this chart of economic data that's coming out. And Friday, core durable goods orders coming out month over month. Core PCE price index, that's an important one as well. All the ones with 3 stars, that's going to have the biggest effect on the market. New home sales, the previous was 632,000. It's expected that 600,000. Obviously, the housing market is slowing down, so we're seeing less sales of homes. That's another one to watch on Friday. And that's probably the biggest one. So that's some of the economic data that's going to be released throughout this week. Again, everything that we talked about in this video so far, all the economic data, there's really nothing positive that could move the market or should, in theory, move the market to the upside. So we are expecting more downside, more pain to come. So for everybody that's a bull, be prepared, get ready. If you're not in the market, I would say stay patient. And if you're trying to go in on a long or you're trying to long the market, I would say stay patient until we start seeing a reversal. Subscribe to the channel. I'll let you guys know when we're seeing the reversal. I let everybody that watched the videos last week know that we were getting rejected and that we were buying into SQQQ. So if you guys watch those videos, you had the opportunity to capitalize on this move to the downside instead of losing money trying to be a bull in this market right now. So if you guys enjoyed this video, make sure to subscribe, share this with a friend. Most of you guys that watch are not subscribed. Like this video, share this video, comment what you guys are watching, comment, let me know how you guys did this week in the market after watching last week's video. And I'll be excited to see what happens next week and fill you guys in, give you guys a quick update. Stay safe, make good choices, try to follow what we talked about, try to keep in mind what we discussed, and I'll see you guys on next week's Stock Talk video.